Mortgage rates took a hit last week, and if it weren't for a slight recovery on Friday, we'd be starting the week with the worst rates in more than a year. As it is, we're just slightly below that. The big culprit last week was oil prices. Right now, as oil prices go, so go mortgage rates. Why? Well, because gas affects so much in our economy relative, especially to inflation. Higher gas prices not only mean higher prices for you at the pump, but also transportation of every product gets more expensive, meaning everything else you buy gets more expensive. And this is the very definition of inflation. So gas going up last week, oil prices going up is what really kicked us in the rear end. This week we focus on the Federal Reserve and their interest rate decision on Wednesday. The market does not expect an increase to the Fed funds rate in order to combat inflation, which is what they would do if they were really worried about it. They aren't sure though that we won't get one. If we don't get one, that'll work in favor of lower rates. Markets do not like uncertainty. Traders don't like uncertainty. They want to know what's happening with interest rates, and they think interest rates should stay the same. So what are we getting this week? Well, Monday and Tuesday are pretty inconsequential. Wednesday is that Fed meeting and decision, and then the press conference from the Fed chair. So that will be a big deal. And then Thursday, even bigger, we'll see personal income and consumer spending, which aren't huge, but then PCE, which is a massive inflationary report. So we'll be keeping an eye on Wednesday and Thursday, especially this week. Mortgage News Daily says current rates on a 30-year at 6.81%, the 15-year at 6.34%, and the FHA 30 at 6.37%. They actually said on Thursday that the 30-year got to 6.85%, which is the highest we've been in over a year. So we continue to watch the war. I know I've been saying this for as long as it's been going on, right? But this is dominating the headlines. Inflation and world events. World events are the war, and the war is impacting inflation through oil prices. So keep watching the war. We're seeing if it escalates. We're seeing if it gets worse. We're seeing how that impacts oil and especially oil futures. And then we know as oil goes, so go rates. If you're thinking about how does this affect me? Well, if you own a house and you're at a super low rate, it really doesn't. If you want to buy a new house, but you don't want to give up a super low rate for a high rate, we need to see rates come back down. And if you've bought in the last 3 years and you're paying a rate in the upper sixes, maybe even sevens, then you're waiting to refinance, and this is going to affect when you can pull that trigger. So if, again, you have questions about any of this, just call Weber Mortgage and we'll be happy to walk you through it. 823-6701. We are a family in the business of helping families.